Hello traders, hope you're doing well. Welcome to my video on the average sentiment oscillator. So this is an indicator that can help you find powerful trends like this one for over 800 pips. And also this one for around 400 to 500 pips. Okay, so this is a simple strategy that you can use on any trading platform. I'm using the MT4 MetaTrader 4 platform here. So euro dollar 4-hour chart. You can use it on any trading instrument, so Forex, stocks, cryptos, commodities, indices, etc., and any chart time frame. I prefer the longer term chart time frames, 1 hour, 4-hour, daily, weekly, monthly, simply because they contain more price data and therefore I find signals tend to be more reliable. It also means less time watching the charts, which is great. Okay, trade smart, not hard. But you can use, as I said, any time frame or instrument that you feel comfortable with. Okay, so the average sentiment oscillator here is below the chart. You can see it's loaded, easily color coded: red for bearish market, blue for bullish market. Basically, if the red is above the blue, it suggests that the market is in a downtrend. If the blue is above the red, it suggests the market is in an uptrend. Okay, so once we know that, how can we trade with it? Well, this is my interpretation, how I would use it. So we're going to look for first a crossover. Okay, we have a crossover here, red above the blue, so we're going to say that we're in a bearish market. And we're going to have to just time our entry following on from the crossover. So how I would time my entry is waiting for a pullback. So you can see the pullback here. Okay, and then I just draw my level of support. And a breakout of the pullback is my entry signal. So there, okay, see that? Red crossed above blue, you have a pullback, you have a breakout. We're in this trend. And if we zoom out, this trade was good for over 700 pips. Okay, I would have placed my stop loss just here above the high, so around 20 odd pips, which is really good, especially for the 4-hour chart. It's relatively tight stop loss. And as price fell, I would have moved the stop loss to break even, then used a trailing stop above the high, above the high, above the high, above the high, just to lock in as much profit as possible on the way down. Price may have turned around and taken us out here for our trailing stop. Okay, but we can always re-enter again using the same strategy later on, which here you can see we have the red crossover. So we look for our support, have a nice support line there, and break out to the downside there. Okay, and then we're back in the trend. Again, stop loss above the high. Here, stop loss at break even and perhaps a trailing stop on the way down. You can, of course, manually close part or all of the position if you wish. What I wouldn't want to do is to get into a nice trade like this with a 20 pip stop loss. See price drop to here, get excited. Okay, you've made 100 pips, fantastic trade, but you've just left too much on the table. Okay, once we do find a good trade, we want to try and milk it as much as possible. That way, even if we do take a few losses for 20 pips here and there, we can still, we can afford to, because we know when we do eventually get it right and catch a big trend like this one, we're going to make back those losses and then some more on top as well. Okay, how some traders would trade this average sentiment oscillator as well is they trade it every single crossover. If blue crossed above, they'd buy. If red crossed below, they'd sell. Red crossed above, they sell. I wouldn't do that. You're just going to get chopped in and out of the market. Okay, you can see here, buy, sell, buy. Okay, you will get the odd good entry, but for me, it's much better to look at the overall trend. You know, you can see clear downtrend here, and then just time the entry on pullbacks there. Okay, you don't want to sell too low either. You know, you can see using your eyes, even though there is a crossover here. Okay, you can just look and say, well, there's already been a move down for, 300 odd pips. Do I want to risk selling at the low? Okay. So that's one way you can use it in a downtrend. In an uptrend, basically the same principles, but reversed. Okay, we can see the market's making these higher lows. So we know we're in an uptrend. We wait for a clear indication. Basically, the further away these lines are from each other, okay, the greater the trend is. Okay, that does mean as well that when it's too high up, it can signal an overbought market. Like you see when it's high up here, price is up here, it might be the market might start to become overbought. Okay, just as when it's really high here, it might start to become oversold. Okay, so crossover we get this time the blue above the red, so we're in a bullish market. We know that, higher lows, and then you can just draw your resistance and trade a breakout on resistance, either there or perhaps this resistance in here as well. The market is making lower, higher lows there. Got a nice wedge formation, a big breakout to the upside. To zoom in, you also got an engulfing candle there. Lots of bullish price action here. 3 white soldiers pattern. Various other, got a bullish hammer there as well. Lots of bullish signals. Okay. There's potentially even an earlier trade here. If we just look at the crossover of the blue, coincide nicely with the breakout of this resistance, and then this resistance in fact became support around here later on down the line. But again, ample opportunities on this uptrend. This is perhaps a bit late to the party. There was another crossover here, and then you do have a pullback there, even here as well, a pullback and a breakout. As I said, 4-hour chart, so you find that these levels tend to be quite reliable. We don't want to end up buying too high. Okay, and another thing worth mentioning, I'm not going to only take a trade based on the sentiment oscillator. Okay, if I see a pullback and a breakout opportunity, I might just take it regardless. It will just generally tend to agree with what you can see using your eyeballs anyway, that if the market's up, it's blue, if the market's down, it's red. But you can look at a chart to tell you that. I think the key things here are perhaps staying out of trouble when the lines are too far apart and the market may be overbought or oversold. Okay. But generally, I don't think it's going to make that much of a difference if you're trend trading, trying to capture these big moves. I certainly, as I said, wouldn't trade every single crossover. If you do insist on trading the crossovers, I would do so in line with the trend. But even then, you can see we're in a strong downtrend here. You had a crossover here, but you know, it wouldn't have been the ideal place to buy in this trend when you had all of these opportunities. You know, you had an initial breakout up here of that support level, a mini pullback here and a breakout, pullback here and a breakout, pullback here, support becomes resistance. You had ample opportunities to enter. Okay, support, breakout, support becomes resistance. You see what I mean? You could have traded multiple entries into this downtrend without these even crossing. I would say it can be good for helping you spot pullbacks as well. Like when you see this dip, okay, this tends to be where the pullback occurs. So dip, that was a pullback, dip, that was a pullback. Okay, so that can be a good time to maybe start looking for when to draw your support in a downtrend or resistance in an uptrend. So you have this big move up here, and then as it dips, then that's when you can start thinking about drawing your resistance to trade the breakout. Okay, being cautious. Well, you can also even trade the pullback down here somewhere. You don't have to wait for the breakout. It's just that sometimes the reversal will continue in the opposite direction, and the breakouts tend to give you more momentum and power and be more significant levels in general. But I can certainly see the potential with the average sentiment oscillator. Good money management, good timing. You can create a winning trading strategy. Make sure you demo trade to begin with to start seeing consistent results. Sure, you've got your trading discipline in order, so don't let fear, anger, and greed cloud your judgment. Don't revenge trade, don't overtrade, don't get fear of missing out. So many instruments and time frames to choose from. There's always going to be opportunities, so make sure you take the right ones. Okay, hopefully you found something useful in this video that you can apply to your trading strategy. Do appreciate you watching. If you can like and subscribe, that'd be great and really help my channel. I hope to catch you on the next one. Take care.